Good morning, everyone. I'd like to call the meeting of the Finance Committee to order, please. Doug, are there any public speakers?
No, sir, no public speakers.
Next, may we have the approval of the January 25th minutes, and may I have a motion? Second. Any comments or questions? All in favor? Aye. Doug, can you take us through the work plan, please?
We have no changes to the work plan.
Next item is Budget Watch.
Budget Watch. Okay. This month's Budget Watch. Too fast. We're focusing on January operating results and subsidy results through February. We're comparing results against the 2016 budget, which is included in the February financial plan, which I'll describe later. Starting with the revenue, for the month, passenger revenues were unfavorable by $16.5 million or 3.5%, mainly due to the impact of Winter Storm Jonas, which is on January 23rd and 24th. New York City Transit and MTA Bus were primarily impacted. They were each over 4% unfavorable for the month. The commuter rails were essentially on budget. Despite the winter storm, toll revenues were 2.3% favorable for the month, and as Don Sparrow said earlier, that was mostly due to higher than anticipated traffic levels, largely resulting from low gasoline prices. Moving to expenses, for January, overall, they were lower by $31.1 million or 3.4%, due mainly to the lower energy prices that we've all read about and some timing delays in various services categories. Debt service for January of $210 million was $25 million or 10.6 favorable to budget. The favorability is mainly driven by the timing of new money bond issuances and lower variable rates in interest. Moving to subsidies, overall subsidy results through February were unfavorable. February year-to-date payroll mobility tax receipts were unfavorable by $16.3 million or 5.3%. We think that may be due to the timing of payments of Wall Street bonuses, which they vary from month to month in that first quarter every year. So there's really not a finite pattern there. So we'll be watching that. Petroleum business tax receipts through February were unfavorable by $6.7 million or 6%. The unpredictability of month-to-month PBT receipts also makes it difficult to ascertain if the unfavorable variances are real or timing related. However, we know that we were favorable at the end of 2015, suggesting that overall the end of 2015 to 2016 period are coming in total just about what we expected when we did the November financial plan. Real estate taxes through February were unfavorable to the budget by $5.7 million, or 2.2%. So that's a lot of ups and downs, so I'm going to try to summarize. Overall, preliminary results were on target for the month and slightly favorable year-to-date. Net operating results were favorable, with lower spending being partially offset by unfavorable passenger revenue, the result of the adverse winter weather in January. However, some of the expenses related to the late January snowstorm were not included in agency actuals for January. We'll see some of those in the February results next month. Again, debt service expenses were favorable. Year-to-date services were unfavorable. Year-to-date subsidies were unfavorable. Overall, those add up to just being slightly favorable overall to the budget. Any questions?
Okay. Good afternoon. Finance Watch is in Director's Desk and available for your viewing there. I'm just going to pull mine up. So just to recap, we had on January 28th the issuance of TBTA General Revenue Bonds 2016A. I briefly summarized those at the last meeting, but just to recap, it was a combination of new money, and we also took advantage of very favorable market conditions and advance refunded portions of a number of series of bonds which are listed here, a total of $256 million. And that resulted in a savings of $34.57 million on a present value basis, or 13.5% of the refunded bonds. And that was a transaction led by Citigroup. So the other statistics follow there and available for you for your reading. Moving on, Most recently, and we're very pleased to report that last week we completed the issuance of the MTA Transportation Revenue Green and Refunding Green Bonds Series 2016A. This was our inaugural issuance of green bonds that were certified by the Climate Bonds Initiative and verified by Sustainalytics. We've talked about this for several months, and we were very pleased with the results of the transaction, and I'll summarize those here for you. The all-in true interest cost of the transaction was 3.54%, or a TIC of 3.49%. We had very favorable market conditions, and the spreads between the high-grade index and our transportation revenue bonds were the best we've ever seen. Again, following on that very successful December transaction where we did some refunding there on very aggressive levels, we were able to replicate those results here. And again, due to the favorable market conditions, we also added some refunding bonds in. And as you can see here on the statistics at the bottom, we had a total of, sorry, let me just get my notes correct here. A total of a TIC of 2.07% for the refunding that generated $68.49 million, or 18.7% of the refunding bonds. And I just want to compliment our senior manager, Ramirez and Company. Did a very fine job working with us on getting the certification, the verification, and particularly in bringing the bonds to market and generating some real investor interest from investors interested in sustainability and investing in green bonds. And we were pleased with our overall retail order period that brought in about 270 million retail orders, several of which came in from high net worth individuals that bought the bonds simply because they were labeled green. So that transaction will close here next week. Again, this was our inaugural issuance of these green bonds. We'll continue to bring the transportation revenue credit to market with that green designation as investor interest, investor desire for these types of bonds continues to grow. Upcoming, we have a planned issuance of dedicated tax fund refunding bonds that we're preparing to market. We're targeting approximately a 500 million size, but I would just note that this is market sensitive, and the value will go up and down depending on market conditions. We've tapped Wells Fargo, one of our senior managers, to manage this transaction for us, and it is a merit-based transaction, and I'll report more on that next month after the issuance. Lastly, we have to report in late January, we executed our monthly fuel hedge. 2.9 million gallons were locked in at an all-in price of $1.27 per gallon. It was competitively bid, and Jay Aaron, Goldman Sachs, won that bidding. That concludes Finance Watch. I'm happy to take any questions now.
Hearing no questions, MTA headquarter actions and agency actions. Doug?
Yeah, Pat, do you want to keep going?
Sure. Okay. So there's a staff summary on Director's desk, and it appears on page 32. Thank you. The intent of this staff summary is to seek approval to authorize the novation of our 2 Broadway swaps from existing counterparty UBS to 2 new counterparties, U.S. Bank and Wells Fargo. This is beneficial to the MTA for a couple reasons. One, it gives us counterparty diversification. Instead of having that concentration in UBS, we now have it with 2 separate entities. We already have a substantial amount of transactions with UBS. These are more highly rated entities. And this will also involve a delinking of the swaps from the 2 Broadway COPs to Tribro, which is our best credit, and this will involve an amendment increasing the economics to the MTA. So with that, I would just happy to take any questions and seek approval.
Can I have a motion? Second. Any comments or questions of Pat? All in favor? Aye. Opposed?
Okay, the next item is the extension of the owner-controlled insurance for East Side Access. Oh, sure. MTA Risk and Insurance Management is seeking board approval to extend the following insurance coverage components of the MTA's owner-controlled insurance program for the East Side Access project through March 31st, 2021. We're asking for authorization to increase funding and extend OCIP general liability and workers' compensation through March 31st, 2021. Total additional funding is estimated at $183.5 million. We're also asking authorization to increase funding and extend excess liability, pollution liability, and railroad protective liability also through March 31st, 2021. Total additional funding is estimated at $62 million. Finally, we're asking authorization to increase the maximum fee under the broker services contract with Willis of New York for OCIP services through December 1st, 2022 by $2,541,000. Sure. We have representatives here if you have specific questions.
Is this insurance anywhere it may occur within the confines of the East Side Access Project, or are there geographic limits to this?
Phyllis? Is Phyllis here?
It is for the contracts that are awarded in the East Side Access Project. It covers all.
So no geography involved? Okay, thank you.
And the additional funds come from
Thank you. The additional funds come from the,
It's anticipated that the additional funds will come from one of three sources or a combination of those: the contingency within the project, the contingency within the capital program, or a reallocation of funds from another project. So that's yet to be determined.
and I presume once you've come to a solution, that will come back to the committee and the board.
Yes. Yes, we will let you know what we're going to do.
Motion? Second? Any more further comments and questions? All in favor? Aye. Opposed? Hearing none. Okay.
Okay. The next item is the mortgage recording tax escalation payments to Dutchess, Orange, and Rockland counties. We call that DORF. It is recommended that the board authorize escalator payments totaling $2,434,000 to Dutchess, Orange, and Rockland counties from available funds on deposit in the MRT2 corporate transportation account.
Second, any comments or questions? All in favor? Aye.
Okay, the next item is the 2015 TBT operating surplus, which seeks approval of resolutions which will certify and transfer $750,716,000 of its operating surplus to the MTA and New York City Transit. It'll transfer $182,604, representing 2015 investment income to the MTA. We're asking that it'll deduct from operating revenues for fiscal year ending 20/31/2016 the amount of $26,880,000, which amount shall be paid into the necessary reconstruction reserve. And finally, we're asking to advance the 2016 TBTA surplus.
May I have a motion? Second? Any comments or questions? All in favor? Aye.
Okay. We have an information item being the February financial plan, which you all should have received a copy of. So what we do with February, in order to highlight certain important items that are included within the consolidated November financial plan, the MTA captures certain of these items below the baseline as MTA plan adjustments. In addition, some adjustments to expenditure forecasts in the November plan were derived after agency baseline forecasts were locked. With board approval secured, these items, also referred to as MTA plan adjustments, can be appropriately allocated to the agencies and captured within the February plan. The February plan also gives the MTA and its agencies the opportunity to make technical adjustments to their budgets and forecasts, which will result in improved reporting. It establishes a 12-month allocation of the adopted budget for financials, utilizations, and positions, which will be compared with actual results each month and reported within Operating and the Finance Committee. Unlike the July and November plans, the February plan does not include any new proposals or programs. Detailed explanation of those programs and assumptions supporting this plan that were also included in November can be found in the November 2015 financial plan, which is posted on the MTA website. I'm going to talk about some changes to the November plan. Starting with technical adjustments, we had for enterprise asset management, the November plan included centralized EAM contingency funds that could be used by the agencies as plans became more developed. Consistent with this premise, a small portion of those contingency funds have been allocated to certain agencies for newly identified EAM needs. This results in no change to the MTA's overall bottom line. Investment pension earnings, which had previously been captured below the line in the November financial plan and earlier plans, are now captured within the LARR's baseline, also with no net change to the MTA's overall bottom line. We had a change that actually had some bottom line impact, that being commuter rail overhead rates. The Long Island Railroad and Metro-North have updated the calculation of their 2016 overhead rates to take into consideration the impact of the retroactive wage adjustments that went into effect in 2014. This adjustment reduced the level of credit assumed in reimbursable overhead and thereby increased the non-reimbursable budget by $35 million in 2016 and $12 million per year thereafter. I'll talk about how that impacts the plan a little bit later. With regard to the Second Avenue subway, we had made some provisions to include the necessary funding to finish that work in 2016. However, it wasn't included within the transit numbers. It was included topside, MTA-wide, so transit now has those numbers embedded into their specific baseline plan. The plan includes important policy actions and re-estimates that were highlighted below the line in the November plan. With board approval, these items are now incorporated within the MTA baseline. If you remember, we committed to capital $125 million in additional recurring funding beginning in 2015, and a one-time $75 million contribution that was based on some favorable real estate tax receipts last year. We called that a one-time additional pay-go investment. And if you also recall, there was a $300 million acceleration of the planned 2018 committed to capital contribution into 2015 with corresponding debt service savings from that acceleration. Also, those have been captured in the MTA baseline. Remaining below the baseline are a few items, two of which are the 4% fare and toll increases for 2017 and 2019. Those will require board action. Those still remain below the line at this time. MTA efficiencies not yet implemented. Unidentified savings targets remaining in the November plan total $73 million in 2016, $65 million in 2017, $90 million in 2018, and $82 million in 2019. The MTA is committed to continuing its program of identifying efficiencies that result in overall recurring savings for the organization. It is our expectation that the $73 million target for 2016 will be identified and captured in the July plan. We're working on that right now. We also we identified additional efficiency targets in November, those being $50 million in 2017, $75 million in 2018, and annualizing to $100 million in 2019 and beyond. Also, those remain below the line. The MMTOA subsidy changed from what we had anticipated. We were led to believe by the state that they were earmarking $104 million of the MMTOA subsidy for capital, but instead it's earmarked for operating. So we're kind of just switching that back. So we're offsetting this reduction to the capital program with a corresponding increase in the contribution to capital from the operating budget. The total MMTOA appropriation in the 2016 to 2017 executive budget is unchanged from last year. However, it's $36 million lower than the forecast that we had made in the fall. So if you remember, I talked about the fact that overhead recovery is going to cost the operating budget about $35 million. The MMTOA is coming in about $36 million lower. So we're going to offset that with changes in the way we handle the general reserve. So when the board approved the financial plan in December, it gave the chief executive officer and the chief financial officer the discretion to apply any unexpended 2015 general reserve funds towards unfunded needs or to reduce long-term liabilities. The November plan assumed that those funds would be used to reduce the LIRR unfunded pension liability, which is our lowest funded pensions plan. In December, the MTA released the unexpended 2015 general reserve balance of $140 million. However, those funds have yet to be invested. In the February plan, we're assuming that $70 million of that balance will be invested, with the remaining $70 being used to fund that $35 million on the overhead and the $36 reduction in MMTOA. At this time, however, without an approved capital plan, the MTA will be holding off on investing any of the unused 2015 general reserve funds. So now to get to the closing cash balances, the balances are slightly lower than what they were in November. However, no programs are being impacted at all. The balances are slightly lower in each year, and because of the way balances carry over, it doesn't really have a bottom line impact to the MTA till 2019, when our projected deficit is increasing from $182 million to $257 million, which is a $75 million worsening. That's in 2019, and we haven't even evaluated 2015 results yet, so it's a work in progress. There's not any real major news story here. It's slight worsening in our overall bottom line. And that's the February plan.
Any comments or questions? Ellen?
Not on that item, but I do want to do something. I'll see the questions on those.
Okay.
At the Transit Committee, we had a discussion that followed up on a conversation that you and I had the other day regarding dedicating some staff to the issue of monitoring repeat offenders, sex offenders, and violent offenders down in our system. We had a motion on that that passed without a negative vote, which was to authorize the CEO to assign, which would be you, to assign the number of people that, as you deem necessary, to, in fact, monitor, interact with the district attorney's office, bring things to your attention, bring things to the respective committee's attention. I envision it would impact at least on all of the railroad and transit operations that we have within our empire, with the purpose of working with the district attorney's offices to ensure that people who are in the business of committing crimes within our system against our customers, against our employees, against the people who protect our systems are tracked and precluded from, where possible, from being able to continue to do that. So because it involves more than transit, I said I would raise it also at finance, and so I make that in the form of a motion.
Do we need action on this?
It will affect the budget, so.
Well, I've had a conversation with one president, and that's Ronnie Hakem from New York City Transit. The issue of recidivism in the system, there's been an ongoing dialogue with the Transit Bureau over a number of years with respect to how we can highlight those repeat offenders who utilize our services. And irrespective of whether there is a larger action to be taken, what you've talked about, which is what we can do to track and work with other law enforcement entities, including the district attorneys and the inspector general, to flag on an individual basis those particular offenders that are repeat, and use whatever means available to have decisions rendered when sentences are given out, is something that I've asked each one of the agency presidents to look at. With all the employees we have and all the functions we have, I'm not sure it will require any additional resources, but if it does require additional resources, we will devote the time and the decisions to do that. But I guess what I'm a little concerned with is that I want to make sure we take it through its processes to determine what the actual costs would be before I give approval to something that may be unbounded in cost. But I'm reasonably sure we can do this within the existing budgets, but I've asked, and the conversation hasn't gone past the president of the New York City Transit yet, so I want to take it through its paces.
Okay, I can't imagine that you can't do it without it being within existing staff members. What I'm looking for is, and I think my colleagues want, is who's going to be responsible for making this, for doing this, spell it out to us, and reporting to the various committees as it goes on an ongoing basis.
Well, it's the CEO. I mean, if it's going to be an entity if it's going to be a function that traverses across all the agencies, and the board wants to make sure that we're applying it in an even way across all the operating agencies, it's the CEO. So I read it loud and clear.
Okay.
So I will come back with not only a review of what's needed, but how we would structure it and how it would go forward. And if additional money is needed, we'll address it at that time.
Thank you, Mr. Chairman.
Sure. So why don't you just say that we'll make that part of the July plan is what we would do. if
Yeah,
that
we
was the
would,
case.
which also doesn't get approved by the board, but we would include that as a new need as part of the July financial plan.
But that doesn't mean we can't start the process
That's
now
right.
either, so. Thank you.
Procurements, right? Angel Barbosa is here to take us through the procurements.
Good morning. So for headquarters, there are 6 competitive procurements for personal service miscellaneous contracts for a total of $153 million.
We need a motion? Second? Any comments or questions? All in favor? Aye.
Next on the agenda, we have Metro North and Long Island Railroad. For Metro North, there is 1 competitive procurement for a modification for additional funding to provide continuous rental of heavy equipment and vehicles used by Metro North's various operating division for a total of $3 million. For Long Island Railroad, there is 1 competitive procurement for RFP to design and furnish signal system components for the new second track Farmingdale to Ronkonkoma on the Long Island Railroad Ronkonkoma branch for an amount to be determined.
Can we have a motion? Second? Any comments or questions? All in favor? Aye.
Next up, we have an action item actually for New York City Transit and MTA bus operations. So there's 1 action item for New York City Transit MTA bus operations managed by MTA CC, requesting board approval to enter into 4 agreements to accelerate the completion of critical activities necessary to commence revenue service on Phase 1 of the 2nd Avenue subway in December 2016.
Can I have a motion? Second? Comments or questions? All in favor? Aye.
For New York City Transit, there are 2 competitive procurements for a grand total of $205 million. One is to obtain board approval to award a contract for the 700-800 megahertz bus radio system for New York City Transit Authority and the NTA Bus Company to Parsons Transportation Group of New York Incorporated in the amount of $202 million, and for a duration of 58 months. The contract also includes 3 5-year options for maintenance and training support services, the pricing for which is not included in the total amount listed, as a separate approval and funding will be sought prior to the execution of any option. The second procurement is for a retroactive modification for additional design services for the rehabilitation of 9 stations and line structure on the Sea Beach line in Brooklyn, New York, for the not-to-exceed amount of $3.2 million.
A motion, please? Second? Any comments or questions?
Mr. Chairman, before the vote is recorded, I'd like to be recorded as recused on item number 1, as I did in Transit and Bus Committee, and voting in the affirmative on all the others.
So noted. All in favor? Aye.
So next, we have 3 procurements for bridges and tunnels for a grand total of $27 million. One is a non-competitive procurement with New York City DOT for the construction of pier foundations and other related work which will enable the future construction of a new connector ramp from the Robert F. Kennedy Bridge Manhattan span to the Harlem River Drive North for a not-to-exceed amount of $22.9 million. Two are competitive procurements for a grand total of $4.6 million. One is to amend a contract to include additional work to initiate an all-electronic tolling pilot project at the Cross Bay Bridges and Marine Parkway Bridges and update the software for the toll registration system for a total of $3.3 million. The second is requesting board approval to award a joint personal service contract to provide all labor, material, and equipment necessary to perform commercial driver license training for B&T and New York City Transit for a total of $1.3 million.
Have a motion, please? Second. Any comments or questions on these procurements? All in favor? Aye.
This concludes procurements.
Thanks, Angel. Starting on page 78, you'll see MTA consolidated financial and operational reports. And we have real estate next. Jeff?
Thought he did, sorry. Is it on now? Yeah, okay. We have 4 action items this month. Most notably, we're seeking authorization to conditionally designate Boston Properties as the prospective developer of our property on Madison Avenue between 44th Street and 45th Street. As you know, there are currently 3 old and relatively small buildings on that site, as well as a vent plant that MTACC is building for East Side Access. We've been able to market the site by virtue of our having consolidated Metro-North's offices at the Gray Bar Building on Lexington Avenue and our MTA headquarters here at 2 Broadway. Redevelopment of the site will require a special permit from the city, as well as compliance with the State Environmental Quality Review Act and follow-on decision-making by the MTA Board. So I won't say that today's action represents the culmination of our office space right-sizing project, but it's nonetheless a major milestone for us. We offered the property for long-term lease, stipulating that the selected developer would be required to cantilever over our vent plant and to provide a new on-site entrance for East Side Access, while the MTA, as the fee owner of the property, would rely on proceeds from the lease to finance whatever off-site transit improvements the city requires in consideration of its special permit. We received 9 responses, and following BAFOs, Boston Properties emerged as the clear winner, offering the highest rent per buildable square foot, including a substantial upfront payment. We're pleased with the proposed compensation, which we're confident reflects full market value, and which we're counting on to provide funds for our capital programs. And we're pleased that Boston Properties is proposing to build an all-commercial building of the kind that the city has particularly sought to encourage through its recent Vanderbilt corridor rezoning. However, it does remain to be seen just how big a building the city will authorize and what off-site transit improvements the special permit will require. In the months to come, those determinations will be made through the city's uniform land use review process with plenty of opportunity for public input, and then in due course we'll be back to the board to ask for approval of the overall project. But we do hope in the meanwhile that you'll authorize us to take this important interim step. I'll be happy to answer any questions you may have about any of the 4 items.
Andrew?
ULURP taking as long as it normally does, and the elected officials whose district this falls in taking as long as they do. When do you think we'll know whether it's 24 FAR or up to 30 FAR?
Well, we have a pre-certification process to go through with city planning, and EIS is to be prepared. There's a lot of preliminary work that was done in connection with the rezoning itself and the special permit for 1 Vanderbilt. So we're confident we can do that quickly. We're aiming to kick off ULURP, this summer, and then, as you know, it's a 7-month process. So, on our schedule, we're in good shape to move this forward. Importantly in this development cycle, and in light of the cooperation we've had so far from all concerned.
So there's no question that it would be a minimum of 24 FAR, right?
As a technical matter, there's a question about that, but I think clearly the zoning was intended to encourage large buildings of just this kind. Our site is only 25,000 square feet, so it's not going to be, it's not going to be a hugely sort of large presence on the avenues, and we think 24 is very likely to be the minimum consensus.
And Boston Properties is in regardless of where this comes in?
We've structured our transaction as providing termination rights for either party if we don't get 24.
Thank you.
Any further comments or questions? Want to vote on this one? Second? All in favor? Aye.
And have the other three too, or? Yeah. We already did all four, or? No. Well, I'm glad to take questions about the other items. I think they're relatively straightforward as described in the staff summary.
Any further comments or questions on the other actions? All in favor? Aye. Opposed? None? Concludes the meeting, doesn't it? Okay. Yeah. So we have a motion to adjourn? Second? All in favor? Aye. We will start CPOC at 12:45.
I think it's so significant, it deserves getting into. Was the other